Hey, what's up, guys? Welcome to another stream. So, the purpose of today, guys, is just to basically give a little bit of background on how to use our trading system, especially when you can expect like some news events, or if you're trading ahead of news events. The reason why we're going live today is because because of the Federal Reserve chairperson of the Federal of the Federal Reserve in the United States is going to do a speech today. And then whenever he does a speech, it's very big news. It affects the Forex market and the US dollar. Okay. So that is why I picked this opportunity for us because, it's a very good opportunity for us to just see practically how our trading system works and how it reacts to news and how we can use it when there's actually news events. Okay. So, without wasting any time, guys, let's just jump into our strategy, okay? So, before we actually do the analysis, we're first gonna just go through the trading rules. What to look for to when we get a buy trade, what to look for when we're looking for a sell trade, okay? And then from there, once we're done with that, we're then gonna go ahead and look at MetaTrader 4 and just do some live analysis just to see which opportunities we can take, okay? So another thing that we're gonna do, guys, okay, we have buying and selling rules, right? So when there's like a news event, okay, uh, like NFP or like today the Fed chair speech, or what's the other one, FOMC, when we're using our trading system, we analyze using the higher time frames. Okay, so it can be the H1, H4, and the D1. Okay, depending on the severity of the news event, right? So now the idea behind that is we trade the higher time frame because it gives us the larger picture. Okay, so when we're trading news, we know that the market is going to make very big movements, right? And then when it makes big movements, we need to have bigger targets. So that's the idea. That's the reason why when there is a news event, we use the higher time frames. Okay. So another thing also, guys, just for you guys to just have this in the back of your mind, when you're using the higher time frames, you need to understand that the stop loss value and the TP level are actually several pips away. Okay, so then it's very, very important to use the correct lot size. Okay, so you need to use the correct lot size. If you don't know how to calculate the lot size that you need to use, you need to download an app. It's called FX Calculator. And then with this FX Calculator, it'll help you to determine which lot size or what number lot size to use, especially when you're about to enter into a trade, when you got a trading signal. Okay. So we're just gonna go through now. We're just gonna get started with just the basics. I'm just gonna try and move as quickly as I can. We're just gonna look at the basics. What do you look for when you're looking for buy trade, and then what to look for when you are looking for a sell trade. Okay, so let's just jump into it. So the first example that we're gonna make, guys, is this is the buy rules. Okay, the buy rules. This is what we look for when we want to get a buy trade, right? So that's what we are going to focus on right now. Okay, we're looking at buy trades, how to get a buy signal. Okay, now there's three things that we need to see, guys, and you guys already know this. I know you guys already know what to look for, right? But let's just go through it one more time. Okay, so now, guys, the first thing that you need to notice is this white line here that you guys see that I'm drawing on top of right there. That white line, this white line right here. You see this white line, guys. You see that white line that's moving with the price is the first thing that we need to notice, okay? So what's important about this line? So this line basically tells us, right? It basically tells us or indicates to us the behavior of the market, right? So now, if the price is above this white line, it indicates to us that it is a bullish market. A bullish market is a market that's going to rise, okay, or that has a high probability to go up, okay? And then if the price is under the white line, okay, it means that it's a market that's likely to go down. Okay, so now this is what, let me just make it visible. Okay, you see the position of the white line, right? So if the price is anywhere above the white line right there, you know that's a bullish market, right? It's very easy. And then if the price is underneath the white line, anywhere underneath the white line, it means it's a bearish market. Okay, so now if we look at this current chart right now, it's just a random chart, guys. I took the screenshot several days ago, but for this example, for you guys so that you can understand, you need to see that, you need to identify where the market currently is. The market is here, over there, and you can see that it's well above the 100 moving average. Okay, so this suggests to us that we need to be looking for buy trades, because this market has a likelihood to go up because of the position of the indicator, I mean of the moving average. Okay, very easy, guys. It's not very complicated. I just needed more time to just discuss this. Right now, once you've identified where the price is in relation to the moving average, then now you look at the bottom of the screen, this thing right here, this meter here at the bottom. Okay, so if the price is above the moving average, then what you need to do is you need to pay attention to this meter right here. Okay, now this meter, okay, if these arrows are above 70%, you guys see those numbers right there, there's 70%, there's 80%, there's 90%, there's 100%. Okay, this indicator right here is just to show us the volatility, the strength of the market, okay, at that particular moment, right? So when this meter is at 70% or more, then that gives us an indication that we need to look for buy trades. Okay, so that's the second step, right? First step, identify where the market is in relation to 100 moving average. And then the second step is we need to see this volatility meter. It has to be above 70%. It can be at 70 or more. Okay, now once those two factors have been identified, guys, then now we can look at the trading levels. Okay, so if the market or if the indicator has indicated to us or shown us buy trade, right, then we can actually trade those levels. Okay, so as you guys can see, the market is above the 100 moving average. Okay, the volatility meter is above 70%, and then now we can take the trade. Okay, so if this market was down here, we'd open up the buy trade, and then we'd use these take profit levels. Okay, and these stop loss levels. But now, as you guys can see on this particular chart, right, the market has already passed TP1. So what we do then now is we enter the trade over there where the market currently is, and then we would target TP2, right? And then we can use the stop loss, we can put it there where the original was, or we can just put it at the entry point, whatever the case may be. But we can use the one that's recommended by the trading system. Okay, so that's basically what you look for, guys, when you look for buy signals. Okay, the market, let's just run through it. The market has to be above the 100 period moving average. Okay, the white line, it has to be above this white line. Okay, the price needs to be above the white line, and then the volatility meter needs to be at 70 or higher. Okay, and then once those two factors are in, then we can use the buy trading levels to get into our trade. Okay, very easy. It's very, very easy, guys. It's very, very easy. Okay, so since you guys already understand that, let's go ahead and look at a sell example. Okay, let's maybe look for another one. Let me see here. What did I do here? Okay, here's a sell example, right? The same rules apply, guys. The same rules apply. The first thing that you look at, you don't look at the trading levels immediately, but what you need to look at is this white line. Okay, let me just use a different color. Is this white line right here. You see this white line over here, guys? That's the one that you need to first look at. Okay, and then you want to see where the market is in relation to the white line. Okay, so as you guys can see, The market is under the white line. It's down here. It's right over there, which is underneath the white line. Okay, that suggests to us that this is a bearish market, and a bearish market is a market that's likely to go down. Okay, very easy. Now, um, once you've identified where the price is in relation to the moving average, then you need to look at this bottom meter right here. Okay, and as you guys can see, we want this meter to be above 70%. We want it to either be at 70 or higher. Okay, so as you guys can see, it's actually at 90, right? So now we can see that our meter is at 90%. That tells us that these trading levels are correct. Okay, so since this is a sell signal, then we can now enter into our trade, and then we can use the take profit levels that the system gives us, just like that. Okay, very easy, guys. It's so easy, right? So these are the basic rules that we use to find our trades, guys. Very easy, very easy, very easy. You see, now you look at where the market is in relation to number one. You can see that you identify the position of the market in relation to the white line, okay, which is the moving average. If it's underneath, you look for sell signals. It's a bearish market. And then the next thing you want to see is this right here. The market has to be above 70%. On this volatility meter. It has to be red. Okay, for a sell trade, it has to be red. Okay, because it indicates that it's a downtrend. You guys see that? Okay. And then once those two things are confirmed, then that validates our trading signal. Okay, so we can use TP1, TP2, TP3, whatever the case may be, and then we can use our stop loss. Very easy, guys. So easy. So easy. So easy, right? So now, since we've looked at the basics, right? We've looked at the basics and we understand the basics. I think we're ready. We are ready to look at, we're ready to do some live analysis, okay? So now, before we jump into the live analysis, we've still got about 10 minutes, okay? Another thing that you guys need to understand, right, is that trading has three different parts, okay? It's the identification part of the signal, okay? And then, it's the execution part. Okay, no, it's two parts actually. It's when you identify the opportunity and then when you execute the opportunity, okay? So timing is very important, right? So now I just showed you the general rules that we use in order to find buy trades, okay? But then you need to take it a step further. If you really want this to work for you, or if you want to trade in line with the market, you need to put your timing. You need to get your timing on lock, okay? What do I mean? You need to understand the different trading sessions and the different markets or currencies that work within those trading sessions, okay? You need to analyze the right currency during the right time period or during the right or the correct trading session, okay? Because you don't want to be looking for opportunities on the wrong currency at the wrong trading session, okay? So you just need to do that. And you see, like what we're doing today, we are going to analyze the market before the news event hits, okay? So sometimes you need to have that timing, because when the market starts moving, it becomes very difficult to see clear signals, okay? So you need to be analyzing the market when it's stable so that you can take advantage of whatever explodes afterwards, okay? So just something else to think about, guys. Nothing too hectic. So now let's just jump in and look at the market right now. Okay, let's look at the market. Let's look at the market. Let's look at the market, guys. Let's see. So, all right, let's go back and look at the market. Okay, so now we can do the analysis. I do believe that we are together, and I do believe that we are all of the same understanding. Okay, so let me just close this trade that I just opened this trade just now. Okay, so I just want us to analyze together. Okay, so I'm going to be analyzing the markets on the H4 chart, okay? And the one that I'm going to start with is gold, right? So, um, the first thing that I told you guys to look at is you want to see where the price is in relation to this white line right here, okay? So as you guys can see, the price is above the white line, okay, which indicates to us that this is a bullish market. It's a market that's likely to increase, or a market that's likely to rise. So that's the first thing. And then the second thing that we look at is the volatility meter at the bottom, okay, at the bottom of the screen. As you guys can see, we are above 70%. And then those two factors that we've just identified, they validate our trading levels. Okay, so if we look at our trading levels, our initial buy entry was down here, and then the market rose, and then it hit TP1. Okay, and then now the stop loss obviously adjusted because the market rose. Okay, so now we are above the TP1. So now if we get into this trade where the market is right now, then our target is going to be TP2 and TP3. TP3 is all the way up there. Okay, TP3 is all the way. Okay, now I can't. TP3 is all the way up here. Okay, so now this is a good trade for us to take. So I'm just going to do that real quick. 0.01 because this is gold. And then I'm going to click buy, right? And then I'm just going to drag. I can use TP2 or TP3. TP3 is looking good for me right now. So I'm just going to go ahead and do that. And then just like that, we have our trade, guys. Just like that. Okay, just like that. Okay, even let's even target TP2. Okay, so I will post this trade on our Telegram channel. Okay, so now let's move on to the next one, which is AUD USD. Okay, same thing, guys, right? So I'm just going to look at 5 charts. Okay, guys, I'm going to look at 5 charts just to save time, because you know, closer to when the news event hits, the market suddenly starts to what you call be volatile. Okay, so as you guys can see, first thing that we look at is the price is above the 100-period moving average, indicates to us that this is a bullish market. We look at the bottom screen, we can see that we're above 70%, which validates our trading levels. Okay, so now if we were to enter into this trade, we can use this SL, we can use that TP1, TP2, or TP3, just like that. Okay, let me see which other one we can take. Another good trade. Okay, here's another trade. Okay, not quite yet, not quite yet. Okay, this is the Euro USD, guys. Okay, so it's also good to see which trades are good and which trades just aren't there yet. Okay, let me just put this over here. Okay, the Euro USD, guys, the only thing missing is the volatility meter, okay? So this is indicating to us that there might be a change on this market. So right now, we're not going to enter into this trade. You see, if you look at the Euro USD, this is the current chart that's on the market right now. You can see that the price is above the 100 moving average. It's above the 100 moving average, but then the volatility meter isn't quite at 70%. So when it's like this, we don't force to trade, okay? We just move past, right? So I'm just gonna go ahead and move past. There's really no time to waste. So I'm just gonna keep going and seeing which other market we can look at. Let's see. Where is USD CAD? JPY. Let's see what's going on. AD CAD. Hey guys, I'm just quickly looking out for more trades. Euro CAD. We just need one more. Oh, we only got one sig. Oh, wait, no. I didn't open up the trade on AUD USD. Let me just do that quickly. This is a Forex pair, so I can actually open up AUD USD. I'm gonna use TP2. And also, guys, another way to also really give you an edge, okay, you need to be able to look at the price action and determine the direction of the trend, okay, because that can actually be very, if you're able to identify the direction of the trend, okay, that can really help you, because now you don't want to be buying when the market is in a downtrend, okay, and then you don't want to be selling when the market is in an uptrend. Okay, so let's see. Okay, USD JPY, guys. You guys can see USD JPY. The price is underneath the moving average. It's underneath the white line. Okay, which signals to us that this market is likely to go down. This is a bearish market. And then we look at our volatility meter. You guys can see that it's at 70%. Okay, the volatility meter has to be at 70% or above. Then that is also acceptable. It's at 70%, so it's acceptable, right? So then that validates our trading levels. So now if you look at the market, okay, we're close to TP2. So if we get into this trade, we can target TP3 and then we can use our stop loss. Okay, so I'm just going to go ahead and do that right now. And then I'm going to use my TP3. And then I'm going to use my SL just like that. Free margin. I still have some capital to trade with. Okay, and then just like that, guys, we have our trades, okay? Just like that, we have our trades. Easy peasy, okay? Okay, we still got a little bit of time. Let me just use this time to take this time to also just do a quick explanation on something real quick. So just hold on because we still got time. We finished a little bit earlier than I expected. So let's see. So we got, okay guys, so we've got three trades. We've got a sell on the USD JPY. We've got a buy on the AUD USD. And then we've also got a buy on gold, okay? So now, let me just jump in and show you something, okay? So we already did our analysis. We already opened up our trades, right? So now I just want to also give you guys a little bit more insight, okay? Because I always say this and people just sometimes they miss this. But guys, in order to trade successfully, okay, you need to be able to identify a few things, right? So let's start with the sessions, okay? We spoke about it a little bit, so I'm just going to use maybe these next 10 minutes to actually explain this, okay? So then in the Forex market, you have three sessions, okay? Or should I just type this? Three sessions. Three sessions, okay? You have three main sessions in the Forex market, which are the Tokyo session, okay? This is commonly referred to as the they call it the Asian session sometimes, okay? Let me just make my writing a little bit smaller so that I can have a bit more space, okay, so you guys can see, right? I don't want you guys to say this guy didn't. Okay, let me see now. I just want to get the right size. You know, let's use 28. Yeah, 28 is good. 28 is good. 28 is good. Or let's just use 36. Okay. Yeah, guys. So there's three sessions in the Forex market, okay? There is the Tokyo session. Tokyo session. Hopefully I wrote this correctly. Actually, guys, I don't want to. Tokyo session, okay? And then there's the London session. There's the London session, and then there's the New York session, okay? So guys, understand this, okay? So in the Tokyo session, right? You can expect to trade things that have JPY, AUD, what else? And CAD as well, right? Am I correct? I think so. Yes, I think I'm correct. I probably am correct. Okay, so any currency with the JPY, AUD, CAD prefix is what we typically look for look for opportunities in during the Tokyo session, okay? And then during the London session, guys, we would typically look for trades which have the GBP prefix or the US, not the USD, but what's the other one? The Euro prefix, okay? So those are the ones that we'd like to trade in the London session. And then in the New York session, you look for trades with the USD prefix, okay? and the GBP prefix as well, because now the GBP and the euro as well, but in this order, okay, in this order. So you look, priority would be the USD prefix or currencies with the GBP and the euro, but primarily it's the US dollar that's the main man there, right there, okay? So another thing you guys need to understand, okay, is that there's three main trading sessions, and the market has three main trading behaviors, right? Three behaviors, okay, or three ways that the market moves. Let's just say three ways the market moves, okay? All right. So the first way is the uptrend. The second way is the downtrend. And the third way is sideways, okay? The sideways trend, okay? So now, in an uptrend, guys, you want to look for buy trades, right? You want to look for buy trades. And then in a downtrend, you want to look for sell trades. And then in a sideways trend, you want to sell at the resistance. I'll explain this. And then you want to buy at the support, okay? So now, let's discuss the uptrend first, okay? The uptrend, okay? Let's look at the uptrend first, okay? So what does an uptrend look like? So an uptrend is when you have the Forex market or the price moving in this fashion, okay? The market doing something like this, okay? So now I want you guys to picture this in your head, okay? That when we're using our trading system and looking for opportunities, these are the things that we need to look out for, okay? We want to see the market, if it's an uptrend, we want to see the market clearly moving up like that. It's like something that you see, if you look at the gold right now on the 1 hour chart, something like that, okay? So an uptrend is when the market is consistently making higher high points and higher low points, okay? So here, guys, we want buy trades. Okay, we want buy trades because the market is shooting up, okay? Right? And then let's look at the sell trades, okay? I mean, let's look at a downtrend right now. Downtrend. The next one is downtrend. Okay, now let's not make this green. Let's make it red. Downtrend. Downtrend. Okay? Downtrend. So in a downtrend, guys, a downtrend would look something like this, the market pushing lower like this, okay? So in a downtrend, we look to open up sell trades, okay? So guys, we have a better chance of winning, especially if there's like, high impact news coming up, and then we can identify the price action trend, you see? Um, Signals which are in a trend already, okay, those are the signals that are going to be the most successful because they are the higher probability trades, right? Because you want to be trading in the direction of the market, which is very good. That's what we want. So that's why sometimes, I can get maybe two signals on two different currencies, but I'll prefer one over the other. The reason is because I looked at the price and I saw that it had a clear trend, okay? So in a downtrend, guys, you want to be looking for sell trades, sell signals. Okay, that's what you want. Okay, and then the next one is the sideways trend. Okay, let's just do sideways trend. Let me just write it for you guys. The sideways trend. Okay, so it might get a little bit tricky here. So the sideways trend. Okay, the sideways trend. What do I mean by the sideways trend? I mean that the market isn't making continuous higher points and it's not making continuous lower points. What it's doing is it's playing in between two levels, okay? In between two levels like that, okay? It's almost as if now the market has a ceiling and then it's almost as if, you know, it's almost as if the market has a floor, okay? So now, where do you buy in this type of situation, okay? So whenever the market is moving, right, and it gets to the bottom of the range, this is where you'd open up a buy trade in this type of situation, okay? And then where do you sell? Whenever the market goes up to the top of the range, right, that's where you'd open up your trades right there. That's where you'd open up your trades, okay? So that's how you trade a sideways trend. This one is a little bit more complicated because a bit more factors are involved, okay? Now, there's also other opportunities here because, sometimes, guys, the market won't be in a sideways trend forever, okay? So at some point, there will be a breakout. So if it breaks out to the top, that's when you'd go in for buy, okay? And then if it breaks out to the bottom, then that's where you'd go in for sell. But that's a little bit more advanced, okay? It just needs us to have a little bit more practice. But these are also excellent opportunities to trade, right? So yeah, anyways, guys, thank you so much for watching the training session or the live trading session. We're done with what we're doing today. We've got about 3 trades right now in our lunchbox, and I will post them in the Telegram channel so that you guys can see. But yeah, anyways, guys, if you have any other questions, just let me know. And then, yeah, take care, guys. Good luck with your trading. I'll see you guys on the next one. Take care, guys. I'll let you later.